There is an event coming up which could cause a major sell-off in the crypto market. It seems at this point in crypto's 4-year cycle, the market likes to crash. The question is though, will history repeat, or is this time different? And it could all literally depend on the next US CPI data being released on Wednesday. And so in this video, we'll be covering what exactly is this crash, what I'm calling the 240-day crash. Then what makes this even more challenging is that there's also a solid case to be made as to why there could be an explosive move to the upside also starting on Wednesday. And so we'll finish with how do we position ourselves so that we can benefit from either direction no matter what happens. Okay, so first up, although we don't have a lot of data points, around 240 days after the Bitcoin halving, the crypto market likes to do a massive correction. Check it out. So the first thing to cover is what exactly is this 240-day crash? Well, if we look at the crypto market, we can see this is the halving going through the middle. This is the nice bull market that we're in, but we're actually going to zoom in on this little period here. As you can see, this is like a big ship coming into a storm, as in the last 2 points at this point in the cycle, crypto has done a massive crash of 30%. And this corresponds to about 240 days after the halving, and the halving being here. So about 240 days after the halving. In fact, this one was 240 days. This one was a little bit earlier, 237 days. For some reason, the crypto market likes to do a big correction. Now, what makes this difficult is that if this was just January, and in January there was a big crash, January was a big crash, and this lined up to January, then it'd be quite simple. In January, there's probably going to be a big crash. What makes it difficult is that this one happened in March, this one happened in January, and the timing for the current cycle is that it's going to happen literally in a couple of days, and this being December. So the month has been different each time. So that is one of the things that makes this challenging, which we'll talk about a little bit later. So what we'll do first is that we'll jump in and we'll take a look. So this one was 2 cycles ago in 2017. This one was 1 cycle ago, 2021. So let's jump in, take a look, and see exactly what happened. So firstly, 2 cycles ago in 2017, and like mentioned, this happened in March. Now, one of the things that we did see is a big run up to this crash. This is where it peaked out about 237 days after the halving, and this was the big correction or crash that happened to Bitcoin. So measuring from peak to trough, it was about 30. And then when it comes to duration, it took about 3 weeks to finally mark the bottom. So as you can see, a 30% crash over 3 weeks is pretty bad when it comes to Bitcoin. And when we look at the same thing for Ethereum 2017, March, it's actually a very similar picture. We did see a massive run up to the crash event. This is where it peaked out. Then from here to here, this was also close to 30%, 25% crash. However, this one was much shorter. So this one wasn't 3 weeks. It was only 6 days. So a similar style crash, but lasting only 6 days. So this is what happened 2 cycles ago. Then let's take a look at the last cycle. And this time it was in January, as mentioned. and also there was another big run up to the crash event. And the reason I keep saying a big run up to the crash event is that this is something that hasn't happened this time. Just bear that in mind. However, this time it was also a 30% crash for Bitcoin, and this time lasting about 2 weeks. So it was a little bit shorter to mark the bottom here before the trend changed. However, at 240 days after the halving, it did exactly what it did 4 years prior. And when it comes to Ethereum, which could be a good representative for the altcoin market, similar thing, a massive run up to the crash event. This time it did crash 30%. However, it was only 2 days, which is crazy. So Ethereum lost almost a third of its value in literally just 2 days. So this one to me looks a little bit like leverage being flushed out of the system. However, fact of the matter is, at this point in the cycle, both Bitcoin and Ethereum both times have had 30% crashes. So that was 2017 and 2021. Now, the dates to remember is that this one did start 240 days after the halving, but like I mentioned, this one was a little bit sooner, 237 days. And why does that matter? Well, check this out. If we take a look at the calendar for this month, as I'm recording this video, it is the 10th on Tuesday. 240 days would be the 14th of December. However, 237 days would actually be Wednesday. And what is happening on Wednesday? It is the US CPI data release. So what could cause the markets to crash on the 11th? Well, if inflation suddenly jumps up, comes in hotter than expected, it means that the Fed isn't going to be able to inject loads of liquidity back into the market. Obviously, this is really bad for altcoins, and this lines up exactly to the 11th, and the trigger, which could be the snowflake which causes the avalanche, is this CPI data release. So just bear that in mind. Now, just before you go out, sell your entire portfolio and try to perfectly time the market by exiting for a nice 30% crash and then fully buying back in, let me just draw your eyes to this. And this is what happened at this point in the last halving year. So 4 years ago. And you'll notice there isn't a massive crash. It was in fact a massive move. Almost 47%. So there's also a very solid case as to why the market could do an explosive move to the upside. So let's jump into December 2020 and find out what happened. Well, 4 years ago, at this point in the cycle, seems to be playing out almost exactly the same. So the previous month in November, we saw a very strong month. We got to December, and from December, there was actually sideways action, which is what we've seen this month. Then the second week of December, which is where we're at right now, the market actually came down to exactly what's going on right now. And it all comes down and bottomed out the 11th of December. So remember that date, 11th of December. And if we look at Ethereum, it's a very similar picture. Ethereum also had a very good November, similar to what happened now. At the start of December, going sideways to trailing down, which is what happened. The second week, it dropped and bottomed very close to this 11th of December. And similar to Bitcoin, the crypto market then went on a massive rally. So what's happening on the 11th of December? Well, if we go back and check our calendar, 11th of December is the CPI data release. And so if we do get a nice drop in inflation, which means the Fed can then use liquidity, this could also be the trigger to a massive bull run, as this is what happened 4 years ago. So all the roads seem to point to the 11th of December and this next reading. So the question is then, what do we do? Well, jumping back to 2017, first of these 30% crashes, quite simply, if you just do nothing and maybe go on holiday for a couple of weeks, or if you're in the US, vacation, because the crypto market historically has always recovered and then gone on to do the next massive run. So simply doing nothing is probably the right thing for the vast majority of people. However, if you're able to and you have money, then even better, if the crypto market does a 20% drop or a 30% drop, then simply add to your favorite high quality position. And that way, as the market's recovering, you're making money on that position and you'll have more money than you started with at the beginning of the crash, and then off to the next run. Same thing for Ethereum, but it's just a much shorter duration. By simply just doing nothing, the market recovers, or after a 20-30% crash, add to the position and happy days. So the same principle stands. Now looking at 2021, and it's the same thing. If you just go on vacation for a couple of weeks, just a matter of time until we get the next God candle, and then we're off to the races. Or if you can, in the worst gut-wrenching drops in the crypto market, they are the best times to buy. So same principle holds, and it's same is true with Ethereum. But this time, remember, it just happened in 2 days. So if there was a huge fear flash crash, money at the ready to buy the dip, historically you will have done very, very well. So that is how we can benefit from either direction. Because obviously, if there is no crash and the crypto market just goes on its next run, we're all making money, so happy days. And finally, it is a little bit spooky that 230 days after the halving, which is when the crash could happen, just happens to fall on CPI day. Also, 4 years ago, when there was a massive crypto rally, it started the 11th, which just happens to be CPI day. So for me, this is probably the trigger point. Will it be good news or bad? There is an event coming up which could cause a major sell-off in the crypto market. Around 240 days after the Bitcoin halving, Bitcoin likes to do a massive correction of 30% lasting 2 to 3 weeks, and Ethereum likes to puke 30% in about 2 to 6 days. But if you think now is the time to sell out and buy the major dip, just hold your horses. What makes this so difficult to navigate is that if we compare to the same time at this point in the cycle 4 years ago, then the market also went down in December to the 11th, and then there was an explosive move to the upside. And so the question is, what do we do? Well, for most people, quite simply, absolutely nothing, as so far the market has always recovered. And even better, if you can, then after a 20 to 30% drop, then simply add to a high quality position. And finally, amazingly, they both correspond to around the 11th of December, which so happens to be the next CPI release. So will it be good news or bad news in terms of liquidity? So there you are, guys. Hope you enjoyed. So that was a deep dive into the 240-day crash and what we can do about it. And at least this sideways action is probably going to be over, for better or for worse. If you do have any questions or comments, simply post them below. However, just remember, to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.